Hello and welcome to CMC Markets Trading Outlook for the week of November the 9th, 2015. My name is Colin Szysinski, Chief Market Strategist. Our topic this week is what could growing payrolls and China data's impact have on the markets this week. Certainly here on Friday the 6th, it's had a huge impact. We had a spectacular U.S. non-farm payrolls report that was way beyond people's wildest imaginations. The street was expecting 185,000. We got 272,000, almost 100,000 more. We were looking for a rebound in October, but this was something unbelievable. And the best part was it was all driven by the private sector. Almost all of it. There was as I thought, there was a bit of a freeze in government hiring, but the private sector more than made it up. So there's been a big rebound there. It's had a huge impact on markets and could continue to have an impact. The biggest impact is this: it's now pretty much put a December rate hike back on the table. Even Chicago Fed President Evans, who's one of the more dovish members of the Fed and the most dovish of the voters this year, has suggested that now after this report that December could be on the table for on a rate hike. So I think pretty much everybody's going to be talking about it as to whether they'll actually do it. But certainly one of the last things that had been holding the Fed back was that some of the data had started to slip in recent months. If it starts turning up again, things are looking like they could be ready to raise rates, and certainly the street is acting at it. We saw some explosive moves on the non-farm payrolls report, all centered around a big U.S. dollar rally that sent gold crashing, euro crashing, pound crashing, and I think we'll still see the shockwaves from this carry through the coming week, especially since it's a week where there's not as much data and there's not as many speeches. I'll just give a quick preview of what some of the actual key events are during this week. We kick off the week with the China trade balance, and then on Monday night we get China inflation. Tuesday night we get China retail sales. So China really dominates the first part of this week. The other thing we'll watch for on Monday, we have comments from Boston Fed President Rosengren. He's another one of the more dovish members. He's a voter next year, and he had gone a little more hawkish after the last payrolls report. It'll be interesting to see if he continues that. Right now we're watching the doves to see if they're starting to come off of their dovish positions following this payrolls report, because certainly these numbers totally support the hawkish side. On Wednesday we get UK employment. We get a bit of more action in Asia Pacific with consumer confidence, purchasing managers for New Zealand, employment for Australia. Thursday is another big day for Fed comments. We have Yellen, Bullard, Evans, Dudley, and Fisher speaking. So a lot of the big names there out talking again. Wrap up the week with U.S. retail sales, another one where people will be watching to see if we're getting any kind of an improvement in the U.S. economy as we wait for the mid-December Fed meeting. In terms of earnings, we still get a fair amount of earnings from smaller companies, but this week it's mostly focused on retailers in both the United States and Canada. So we have reports in Canada from Rona, Canadian Tire. From the U.S. we get Macy's, Nordstrom, and J.C. Penney's. So that's where we will see, and that of course will give us a feeling of consumer spending as we head into the holiday season. The number of companies, like Macy's and Amazon and stuff, have talked about ramping up their seasonal hiring, but its retail sales have actually been a little bit soft this year, so it'll be interesting to see what do they say, and are they still planning on ramping this up. So what does this mean for markets? So far we've seen a big expectation of a more hawkish Fed going forward, which is really interesting because we've seen other central banks going dovish. The ECB's talking about more stimulus, and surprisingly the Bank of England has gone back and cut pushed their expectation of rate hikes off to 2017 from the middle of 2016. I personally think that that's probably more related to them trying to cushion the effects of ECB stimulus perhaps, and that could change again in the coming months, particularly if the Fed does raise rates, but we'll see what happens. Suffice it to say, there's still a lot of potential of action and change of trends in the markets over the next while. But I just want to highlight some things here. I'm going to start with gold. Gold has been under pressure now for quite some time, but today it really crashed in the news. U.S. dollar took off and gold went straight south. It was trading up near 1110, dropped down to 1090 where it's leveled off. blew right through the 1100 support level. Next big support level for gold is 1070. Gold, I still think, could retest this low, and maybe we'll get a double bottom here. But of course, in the short term, we are seeing RSIs getting a little bit oversold for gold. So does that mean we could get a trading bounce and a retest of 1100? Is a possibility. But I still think that as we're now moving over the next 5 to 6 weeks towards a Fed rate hike, that gold could remain under pressure until the next Fed meeting, and that all gets sorted out. Moving on from gold, I'll just mention crude oil briefly here. Crude oil is an interesting one, and it's a little more mixed. Crude actually ended up down on a percentage basis more than gold, which is intriguing, because when we look at payrolls, you would think that that stronger non-farm payrolls, stronger economy, stronger potential demand for oil. So, and it's interesting to see it coming back off. So this is mainly a U.S. dollar effect. Overall, we're still seeing crude oil trading in about we'll call it 42 to 43 at the low end, 49 to 50 at the high end. Trading channel sideways. RSI is basically bouncing around 50. It's gone back under 50, so we could still see this pull back and retest 43 or 42. Depending, but we're mostly seeing some good back and forth swings in oil, but at the same time we are getting some good swings, so that is good for trading as well. We'll move now over to currency markets and start with the euro dollar, which is particularly similar. This is another one that was absolutely pounded on the news. Look at this. It was trading up. It had already broken 109. It was trading around 108.60, and then kaboom, right down to 107.30. These lows here are 107 even, and now we're seeing it settle into a 107 even to 107.50, 60 range here. We've also saw it here. It took out 108. That was an old support level dating back to April, so that's a pretty significant decline as well. We're getting close to oversold on the euro, so possible we could get a retest of this 108, but over time now, with the Fed heading towards raising interest rates, the ECB possibly bringing in new stimulus, this double bottom back here closer to the 105, 104.75 could potentially be retested. What's interesting about this is a decline in the euro is that it's actually even had an impact on the stock market. And the stock market is, look at this. We saw the DAX just take off on the news. Lower U.S. Euro, good for European exporters exporting outside of the Eurozone. So look at this. DAX just took off, and look at it over here. Exploded up from this Fibonacci cluster here near 10,855 up over 11,000. To about 11,050, so huge move up, and it's now moved down, hanging around this 11,000 level while it digests these gains. RSI, it kind of is high, but it's still basically confirming that the uptrend's intact. We could get a pause here in the near term, but overall, it looks as though a lot of interest coming in. And look at this. Interestingly enough, on the client positions are split. We're seeing that they're still bullish in terms of number of clients, but we've had an increase in the number in the sell positions up into that we now have a majority of bearish on the sell positions. So more trade size, more conviction from the bears here tells me some people were selling into this rally, and perhaps they don't believe it, particularly because the U.S. markets and some of the other global markets were pulling back. So we could see this digest in this 10,850 to 11,000 range in the short term. Well, and just to show that not everybody believed this rally, look, here's the UK 100. Even though the sterling got hit hard, the FTSE did not take off on the news. It just kind of stayed level in this 63.30 to 63.80 area. And here we still actually on sterling have clients pretty substantially on the long side here. If I come over and look at the currency now and look at sterling, sterling got hit quite hard on the news again for a second day in a row, because we had seen this was the first move down. Actually, I'll blow this one up. Here was the first leg down on the Bank of England going more dovish. Here's the second leg down on the Fed potentially going more hawkish. And you've got a breakdown here where it's taken at 151, and it's come down and it's traded as low as about 150.30. We've got an acceleration to the downside on the RSI. You've broken an uptrend. So this thing looks like it could test 150, perhaps could even test a little lower into maybe this zone here of closing lows near 147.40. Is a possibility, or maybe even this little cluster in here in and around 149, probably the first test, more likely to be in and around here. But quite intriguing that the FTSE did not confirm the rally that we saw in the DAX, even though both currencies were hit really hard on this news. In terms of the sterling, we actually have seen a minor increase in the. Here's an interesting one. We have an increase in top clients in terms of number of positions going long, and here we've got an increase of top clients of their position on the short side, so of position values. So really, it looks like people are still pretty split here on what could happen with sterling. Has it gotten oversold and cleaned out, or is this the start of another down leg? Remains to be seen. But interestingly enough, this falling channel support line here comes in around 150 as well. So 150 is going to be a key level here, and there is a potential that it could hold. So we'll see what happens over the coming week, but we could see a lot of activity in and around this level. While we're looking at currencies, I also wanted to take a peek at dollar CAD. Canadian employment also has come out here on the Friday. It's a fairly quiet news week we're going into for Canada. We do have a couple of Bank of Canada speakers during the week, but Governor Pelaez is not one of them. It's some of his deputies are out speaking, so we'll see what they have to say here. But on terms of dollar CAD, we've actually had a bit of a breakout here. We're more or less in a sideways trend between. It's a fairly wide one. That's 128.20. That's 134.30. So it's a pretty wide range. We did have a symmetrical triangle forming here. It's broken up out of that. We had a downtrend in the RSI. It's broken up out of that. So it wouldn't surprise me to see a retest of this 133.40, which coincides approximately with 75-cent round number on CAD US dollar. That'll be a significant test as well. And then the old high here is 134.30. Just to flip the chart over for a second, I will show CAD US as well. And we'll see we are starting to slip back here. Key level 75 cents even, and then the next is 74.25. The RSI is telling us that this is starting to roll over again here, and downward momentum picking up. So we could see some more weakness in the loonie in the short term, even though Canada jobs were good. Canada jobs were good. That does suggest the Bank of Canada is unlikely to cut rates at its December meeting. And the December meeting for what's something that's important to remember for when we're looking at today's reports, Canada's will probably not see another job report before the next Bank of Canada meeting. However, the U.S. will have another report before the next Fed meeting, so that's quite just something to mention as well. So finally, I'm just going to take a quick look here and look at some Asia Pacific markets, because we do get data out from China, and one of the big things people have been watching for is, are Chinese markets recovering, and are they coming back around? And so what we've seen here, let's look at the Hang Seng. Is interesting. So we had a huge crash in the markets, but it was stopped here at this triple bottom. We've seen an initial recovery. Now the question is, are we consolidating at a higher level, or have we topped out and rolling down? Bit of a double top here, but so far the trend's sideways. RSI is indecisive. It's gone back under 50, but it's also gone back under 50 before. So it's if we took out this low on the RSI, I'd start to get more concerned. But at this point, we do seem to be going in a sideways direction of travel for the Hang Seng. If we look at the Japan has still been strong. Look at this. It's a here, even after the Fed came out, we're actually getting a good rally for the Japanese markets. By rights, it should be seen as a sign of strength that you had good job growth in the U.S. and Canada. It's a sign of strengthening underlying economy for Canada. It's a sign that Canada is getting over the oil price crash and rebroadening and rebalancing its economy. So we'll see what happens here. But nice rally up for the Nikkei here. It broke 19,000 and has kept right on going. Good accumulation. And the other interesting thing is, this is coming in Japan on the signs that the Bank of Japan doesn't seem to want to do any more stimulus either. Traders reacting positively to that and seeing that as a sign of strength. I'll just show here a couple of currencies, dollar yen and Aussie dollar, and then we'll wrap up. So we have dollar yen here. has picked up, and it exploded. It was in a trading channel here, 118 to 122. As soon as it cleared 122, bang, off to the races. Added another unit here, up to another big figure up above 123, leveling off near 123.20. RSI close to overbought, but I think it'll digest here, and we could even see it come up into this 124 to 125 zone where it was before, based on this, unless you get some kind of supportive comments again out of the Bank of Japan. And even then, we've had them, and it doesn't matter. The Fed, people seem to be responding quite well to the Fed in terms of the U.S. dollar taking off. A final currency I'll just note here is Aussie Dollar, because we do get Aussie jobs this week, and the Aussie could be sensitive to what happens in China. Here we're getting a breakdown in Aussie Dollar, taking out, we slipped back under 72 here. We've come back, we've broken this trend support line, but so far the 70-cent even round number is holding. But watching here, a failure on the RSI at 50 and rolling down to break a trend line does suggest downward pressure increasing here, so we may yet see that 70. If that gets breached, closer to 69, 69.40 is a possibility for the Aussie dollar. So we don't have as much big headline news this week. I think we're going to see more of an ongoing reaction to the news we've got, because it was such a shock to the markets, and we do have some data coming out from Asia Pacific, and we could see some action in retail stocks as well.